Hey guys, how's it going? It's Andy from Go Investing. Happy Wednesday. In today's video, I wanted to start off by talking about some of the news stories that's been affecting Wall Street so far this week. I started Monday morning, the market was pretty green. I woke up, Tesla was at $1,700, up more than 10%. The market was doing different things than it normally does. The Dow was leading the market, being up 2%, and NASDAQ was pretty flat. And then I went to go play golf at around 9 o'clock in the morning. Everything was really green. And then I came back and saw the massive sell-off that happened towards the end of the day. While there wasn't a lot of big news stories that came out, it appears like a lot of the selling came as a result of Gavin Newsom announcing that California would be shutting down a little bit more than it had been in the past. And the market didn't seem to like that, and it also appears like there was a lot of profit taking, as a lot of the tech stocks that have been leading the market so far in 2020 had massive sell-offs towards the end of the day. We also had some financial news from some of the major banks releasing their earnings. One of the big ones was Wellsfargo, ticker symbol WFC, when they announced a $2.5 billion loss, and the stock fell around 5% as a result of that news. The really interesting story from Wellsfargo is the fact that they were forced to cut their dividend. And this was something that I hadn't seen before, and I actually had to do some research on why this actually happened. And so basically what happened is the Federal Reserve has a stress test, which is something that it gives to a lot of the major banks once they reach a certain threshold for the amount of money that they handle. And it's basically a way to ensure that what happened in 2007 to 2009 with the financial crisis doesn't happen again. As a result of these stress tests, the Federal Reserve decided that Wells Fargo did not have enough protection for a potential recession and forced them to cut their dividend to make sure that they can hold on to as much cash as possible. And so this was the only major bank that failed this test, and as a result, they had to cut their dividend significantly. But unlike Wells Fargo, JP Chase, ticker symbol JPM, actually posted really good earnings, and it was very interesting to compare the differences between JP Morgan and Wells Fargo overall. So from this report, JP Morgan posted $34 billion in revenue, which mainly came from their corporate and their investment bank areas. And so overall, the investment bank area is something that JP Morgan really benefited from, and Wells Fargo does not actually have, which was a huge hit to their quarterly earnings. So overall, JP Morgan posted $5.5 billion in profit from their corporate and their investment banks, which is a ridiculously large number when you compare it to a lot of the other banks in this sector. But some of the things that we've been seeing with these banks across the board has been the fact that they've been setting aside billions of dollars to protect themselves from loan defaults. And JP Morgan came out and said that they're going to set aside around $9 billion in loan protection. And so this is kind of not a doomsday scenario, but it looks pretty gloomy for the fact that the banks are protecting themselves for what could be a really tough end of 2020 and going into 2021. But now that we've gotten that out of the way and talked about some of the news that's been affecting the market, I wanted to talk about one of the top stocks that has been kind of crushing it so far this year, and I don't think it has been getting a lot of attention. Today's video, we're going to be talking about Spotify, and similar to what we did with Sonos, if you missed that video, I'll throw that up right now. We're going to talk about some of the news stories that have been impacting the stock in the past couple years. We're going to be talking about the fundamentals, and then I'm going to be looking at the charts, doing some technical analysis, and talk about where I would potentially buy Spotify for a long-term investment. But before getting started, I have to say that I'm not a licensed financial advisor, and this is not financial advice. Anything you hear in this video is just me giving my own opinions on the stock market, and you need to do your own research before taking any positions. Also, we recently hit 5,000 subscribers, so thank you so much for that. All right, let's start talking about Spotify, which is actually one of the companies that I've been using for at least 5 years. This has been a company that I've used exclusively for my music streaming, and I've loved every minute that I've been a part of it. And so currently Spotify is trading for around $260, and it's up a whopping 74% year to date. Being up this high, I kind of expected to get more news talking about this company, but I have not really seen a lot of it so far. And so some of the news events that came out this week for Spotify is that they announced yesterday that they're going to be expanding their platform into Russia and 12 other European countries. And so this is just going to be expanding the number of people that they can have on their streaming platform. For people that don't know, Spotify has a free and then a premium subscription that they can have to get rid of ads and the ability to download music and listen to it without service. And so for a company that has a free option, I expected that to be a significant portion of their user base, but I was pretty shocked when I saw the numbers. So Spotify has 286 million users overall, and 130 million of them are actually the premium subscribers. And so I tried to look around for some of the other streaming platforms, and one of the areas that I found was from Pandora, which is owned by SiriusXM, ticker symbol SIRI. So overall, Pandora has around 70 million users, and only 7 million of them are actually paid users. So that's 10% compared to around 40% that Spotify has, which is really impressive and just kind of shows how much people like this platform. Let's talk about some numbers for Spotify. Currently, Spotify has around 36% of the overall market share. And while Apple Music is getting slightly closer, Apple is still a little bit a ways from catching Spotify overall. And I think some of the moves that we'll talk about in a couple minutes will show that I think Spotify has this area locked down pretty good. And I don't expect Apple Music to be taking over the streaming leader in the near future. For a company that almost has 190 million active users, 44% of these users use Spotify on a daily basis, which was very impressive. When I put up this graphic, you can see how steady the increase has been with the overall users, and the number of monetized, the paying premium subscribers has increased over time. And so this is a trend you like to see as the user base increases, you want the premium to follow at a similar pace, and it seems to be doing that. And so recently they've made some major splashes going into podcasting, which is something that they're trying to take away from Apple Music overall, which is the leader in that sector. And so they've struck some deals. I'm pretty sure they have around 15 exclusives. Some of the recent ones was they took the Ringer, Bill Simmons podcast and made that a Spotify exclusive. And then they've recently made a splash making the Joe Rogan Experience be a Spotify exclusive and have all of their previous episodes be only on the platform by the end of this year. And so now that we've talked about what we've seen with the news recently for Spotify, let's go and talk about the numbers, because the fundamentals are where we really see if this could be a possibly good deal. As I mentioned, the stock is up significantly, 74% so far this year. And so I'm looking for some impressive numbers to warrant taking a position in a stock that's up almost 75% already this year. When we look at revenue, which is where I normally start, the annual revenue has increased every year since it's gone public, but we did see a recent dip in the revenue in the last quarter, which is not that bad when you compare it to the year-over-year growth of around 19% from this last quarter. When I look at tech stocks, one of the first questions that I have overall before deciding if I want to take a position is, are they profitable? And if not, how close are they to becoming profitable? So Spotify first became profitable back in February of 2019, which was 13 years after they first began, and that was the first time they're profitable. So that's why I often ask about profitability of these tech stocks. But since they've been able to go profitable in February of 2019, they've kind of flip-flopped between being profitable and not. But even the times that they're not as profitable, it hasn't been huge losses. Their most recent quarter had a loss of 19 million, which is obviously not ideal. You want the company to be profitable, but it's not a huge loss, something that would alarm me and push me away from the stock overall. When I look at cash on hand, it's a way that I determine how safe a stock is for the long term. The more cash that they have on hand, the safer they're going to be with a potential recession or the ability to expand into other markets by buying other companies, or in Spotify's case, making some of these podcasts be exclusive on their platform. And so overall, cash on hand has been pretty stable at around $2 billion for the past 3 years. And when I look at long-term debt, I was surprised because it's zero. And as a result of the long-term debt being zero, the long-term debt to equity ratio is zero, which is kind of impressive for a tech stock overall. And so even though the long-term debt to equity is zero, I was pretty impressed that the shareholder equity is around 2.22 billion, which is higher than I would have expected. All right, now that we've talked about the fundamentals that haven't really blown me out of the water, but there aren't as many red flags as I would have expected with a tech stock that's relatively new, let's head over to the charts and we'll talk about some of the interesting things I see there, and we'll talk about the technical analysis that'll lead me to where I'm going to potentially be buying into Spotify in the near future.
All right, so here we are looking at Spotify, and as you can see, it was in a pretty nice horizontal channel for a long time, and this was something that I actually have a very good friend who's going to be my future roommate who owns Spotify and was asking me for advice on the company. I just said, hold your ground, because it looked pretty good. It was just going horizontal for a while, and then it finally broke out to the upside. And as we're seeing now, the stock has skyrocketed. So what I first like doing when I pull up a chart, this is the daily chart. This is actually the entirety the company has been public, going back until April of 2018. And so what I normally like doing is I just go look for some support and resistance lines. This area right here kind of jumped out to me. I don't like making everything just a single line. Sometimes I like having a little zone because support and resistance normally isn't just a single line. It's kind of a range of areas where the buying and selling picks up. And so I like having these set up on my charts just so I can quickly look back at it in the future and be able to make some quick decisions. So I like charting out the low areas. This seems like a decent support, but the area I'm really looking for is right here around the $198 mark. And so right now, if you just look at the charts, it is pretty overextended. We had a nice sell-off in the past couple days. We'll go to the 180-day chart. Things pushed up very nicely, and now it's starting to sell off a little bit. And so at this point, based off of the fundamentals that I didn't think looked amazing, there wasn't any huge news that made me feel very bullish about the stock overall, I'm going to be very patient. And so the thing I'm looking for right here is, as we can see, it tested this $198 mark from the bottom, got rejected, tried it again, didn't get all the way there, tried it again here, and then finally pushed through it. And so I'm seeing this as a very nice resistance at this point. And so as we're above it now and the stock was able to push through that, when we come back to the one-day chart, we can see this is a gap. And this is something that I haven't really talked about on this channel for a while, but I really like playing gaps, because the tendency of stocks is when the chart jumps up and you have a gap, normally the gap gets filled eventually. And so right now the stock is very overextended, and I probably wouldn't be buying at this price. But this gives me a fantastic target to potentially buy if the stock falls to this level. So I'm going to set an alert for the $201 mark, just so I will know if the stock gets to this level, I will probably want to enter this trade. Right now, there's too much movement going on, there's too much uncertainty in the market, but the fact that I can chart this out and have a price target of $200, which is pretty similar to a lot of the actual analyst targets that I've seen, gives me a good plan going forward, and it makes it so I don't have to check the stock every day. I can set this alert, do my own thing, and then if the alert goes off, I can hop back onto the chart and see if I want to take a position. So I'm looking for the $200 mark to enter a trade. That is still a long way away, but at this point, stock is overextended, and I don't see a great buying opportunity based off of the fundamentals and the news that we talked about.
So overall, I think Spotify is a really cool company and a decent stock. At this price, I probably wouldn't be buying it anytime soon. From the charts, we've shown that the $200 mark is where I'm going to be looking to enter. At this point, the stock is at $260, so it has a while to go. But if the market does fall and I can get this stock at that price, the solid support that we've seen there, it looks very appealing to me overall. So I'm going to be very patient with this stock. As I mentioned, I'm pretty worried about the market overall. And so if the market does fall, I think buying Spotify at $200 would be a fantastic decision for my long-term investment portfolio. When I see gap ups on the charts like that, I'm looking for that gap to be filled eventually, and it just so happens to be that $200 mark. So I'm going to be very patient and wait until that level to buy into this company. So overall, the fundamentals didn't blow me out of the water, but it has a lot of momentum on its side. And so I wouldn't be surprised to see Spotify hit 300 by the end of this year. However, some of the price estimates that I've been seeing has the stock sitting around $200 by the end of 2020, which just so happens to be my price target for where I'm looking to enter the stock. So we're going to be watching Spotify for the rest of this year, and that's why I set that alert, just so I don't have to check it every day. And if I get that notification on my phone, I can hop onto the computer and take a position if I really want to. So let me know what you guys think about the overall stock market news that pushed things down with a crazy finish on Monday, and what you think about Spotify overall in the comment section down below. Thanks for watching this video. Really appreciate all the support, and I will see you on Friday.